So Meta lost $73 billion in VR. The ghost of 2022 returned to haunt shareholders. Well, I did not say that. These are the headlines in the past few days. They signaled that this is the beginning of a similar scenario to the 75% crash that happened back in 2022. Well, we all have seen how Meta stock price reacted to the huge miss in earnings last week, and the stock dropped more than 10% in only one day. Even with Meta reporting strong revenue of $51 billion, up 26% year over year. In this episode, I will cover earnings quickly and I will explain the hidden reason behind the fall, which is not the miss in earnings. It is something bigger than that. Then I will explain what are these projects that Meta wants to spend $70 billion on, and are they gonna make money? Are they gonna return money on the investment? You know me, I always tell you the reality and I base my opinions on numbers and not feelings. Finally, I will give you Meta stock price projection by 2026 and 2027, bear case, base case, and bull case. So many to unpack in this episode. If you think you learned something new from my videos, please give this video a like and let's start. There are two main reasons why the stock dropped. The first is obviously the huge miss in earnings, but this was only because Meta took a one-time tax-related charge of $15.9 billion, which dragged the earnings to $1.05. Without that charge, the earnings will be $7.25, which is not really worrying investors. However, what really freaked out investors is the second reason, which is the massive spending they are about to do. Meta just announced that they will spend $70 billion on capex into AI infrastructure, data center, and custom chips, which should pay back in the long term. In other words, Meta is doubling down its bet on AI. And that's what started worrying investors. Investors started to ask, if you invest a lot now, you need to deliver bigger returns later. Also, is Meta shifting its business from primarily ad business and into AI? And that started worrying investors because Meta was huge in the ad business field and now they entered a new field that has already huge competitors like Nvidia, AMD, and other Chinese companies too. It is like a player who plays good at a sport and decided to try another sport that has professionals already leading the game. The transition is expensive and will take time, so Wall Street said it's not just about how good you are doing now, but how good you will be doing in the future and how much risk are you taking to get there. Meta left investors worry about the path, especially that they did not give a clear path or time frame, which is the company going to take the transition into AI and VR, and when the company is going to start generating income from these new revenue streams, especially with that huge cash burn to build these new streams. So what is the one thing that Mark Zuckerberg knows that investors don't, that made him spend $70 billion when everyone else is cutting costs? In my opinion, Mark Zuckerberg is smart. He saw something we didn't see. If he kept relying on ad revenue from social media, he would be risking everything he built. Because that model, which is the one that he made, which is Facebook and Instagram, that made him billions, is reaching its limit. User growth is slowing. Ad space is saturated. So Mark realized something. If Meta doesn't evolve, it will slowly fade like what happened back to MySpace or Yahoo. That's why he's spending $70 billion not just to grow but to survive the next decade. He is shifting from being a social media company to becoming an AI infrastructure giant. From showing ads to billions to powering the technology behind billions. I agree with Wall Street, it is a huge risk, but not shifting would be an even bigger one because in the next 5 years, every major tech company will be defined by how much AI it owns, not how many users it has. Zuckerberg knows if he doesn't make the pivot now, Meta might miss the future entirely. So I agree with Zuckerberg on his plan, even though it seems like he is gambling, but staying the same and not following where the future is heading is the biggest gamble. This guy knows what he's doing. This mind did not build huge $1.6 trillion company by a coincidence. It is a great opportunity for investors to buy the dip now. And now let's move on to the fun part, which is how much Meta stock price will be in 2026, 2027. We will start first with the bear case, which is the worst case scenario, which I personally think this is far from happening, but we will continue. So we will assume that Meta ad revenue growth slows and AI infrastructure is delayed for whatever reason. Margins shrink a bit. By that, revenue growth will be 4% annually, and earnings per share will modest or flat. Maybe earnings per share will be $20 in 2026 and $21 by 2027. Valuation falls to say 15 to 20 multiple instead of 25 to 30, which is the current one. The stock price will be between $400 to $450 in 2026, and if the same growth problems happens and continues all the way to 2027, we can see the stock price range from $350 to $450 by 2027. I don't think this scenario will happen, so let's move on to the base case, which is I still don't think that this scenario will happen, but let's start. We will assume that Meta ad revenue will continue to grow and AI infrastructure project is delivered on time. Margins will continue to improve just slightly. By that, revenue will grow 11% by 2026 and 10% by 2027. Earnings per share growth will continue to grow to reach 28 by 2026 and 30 multiples by 2027. Valuation will remain the same at 25 to 30 multiple. The stock price will be between $750 to $850 by 2026 and $900 to $1,100 by 2027. So let's move on to the bull case scenario, which I think that's more likely to happen, in my opinion. Meta will continue to grow more in ad revenue. AI infrastructure will start generating income by 2027, either by increasing the profit margin by producing their own chips instead of buying them, or by selling those chips to other companies also as well. So, and let's also not forget the VR and its revenue stream that is coming. By that, revenue growth will increase to 16% by 2026 and 15% by 2027. Earnings per share will increase and reach $34 by 2026 and $42 by 2027. Valuation will be between 35 to 40 multiples. The stock price will be between $1,200 to $1,400 in 2026. And in 2027, the stock price will be between $1,500 to $2,000. Just a week ago, Amazon went through the same thing and dropped by more than 10%. People said that Amazon is dying, especially the stock price did not increase in the whole year of 2025. People said that Amazon growth has stopped, and especially that the all Magnificent Seven companies adopted AI, and Amazon still did not do it in a bigger scale. I made a video about Amazon and how Amazon will grow a lot by 2026. Just a week after that video, which is last week, Amazon increased by 10%. Of course, not because of my video, but it's because I did math. And math said that Amazon will increase inevitably. If you want to know what I said about Amazon and why Amazon will increase a lot by 2026, and I said that 2026 is going to be Amazon's year, watch this video.